to Leaders of Tomorrow on ET Now. I'm Sunanda Jay-Seelan. Thank you so much for joining us as part of this high decibel launch that we're going to be doing all of this month and well into next, as we're announcing the 10th edition of the Leaders of Tomorrow. 10 years and 10 seasons of hand-holding you and bringing you the best expert advice and guiding you along your growth journey. And we're excited to have you continue to grow with us even as we continue to grow. Tonight, we're bringing you a perspective on the macroeconomy to talk about stock markets, to talk all things entrepreneurship and the events and trends that are going to shape entrepreneurship as we know it. That perspective being given to us by A. Balasubramanian, MD and CEO, Aditya Birla, Sun Life AMC. Bala, thank you very much for taking the time to join us here as part of this high decibel launch we're doing on the 10th edition of Leaders of Tomorrow. So good of you to take the time to speak to our viewers on the markets, on the macroeconomy, and really your outlook for the budget and what they should be doing as far as their wealth is concerned. So thank you for taking the time once again.
Thank you, Sunanda, for having me part of this annual show on leadership. It's really my pleasure to be part of your show. Thank you.
But to kick off today's interview, first and foremost, sitting where we are, if I can ask you to do a little bit of crystal ball gazing and saying, what's your outlook for 2022 with the information we have as of now?
I think clearly, Sunanda, on the back of 2021 as well as the 2020, both of them are years with a lot of uncertainty, challenges, but yet we came back quite strongly from the broad market point of view. Second, the regulators and policymakers could take many decisions which are more supportive of the economy on one side, as well as macroeconomy on one side, as well as the social economy on the other side. Now, having done that, having seen a significant pickup from the capital market outlook point of view, as well as sentiment towards capital markets have improved quite significantly. And as we get into 2022, I think clearly the year is going to be again filled with a lot of action. So in some sense, a reverse of what they did in the macroeconomic factor, in the sense that 2022 is going to be faced with challenges around potential rising inflation. And second, the interest rates, which have been on the falling side, probably marginally has to go up. At the same time, also keenly all of us are waiting for the growth to come back in the year 2022. Definitely some bit of animal behavior, which I can call it, could also be returning in the year 2022, given the fact the pandemic is now in the last stage of the current wave that we are seeing. Therefore, the 2022 will probably see a lot of action-packed year, even from the consumer point of view, right, from tourism to pick up on the one side, as well as on the growth to come back on the other side.
Absolutely, and you were saying inflation. We're going to talk inflation, government spends, capex, and what can really be the growth, if you can see any there, as well as your views as far as manufacturing and technology are concerned, both of which I know you follow very keenly. But I want to start first by talking about the interest rates. Let's talk about what's happening domestically, sir, and then we'll talk about the action we're likely to see coming from the US. I'll come to that in a moment. But in India, given where we are in terms of the inflation pressures, we do have the monetary policy review coming up in a short while. What are you expecting as far as interest rates?
The way, if you look at from the past versus the recent one, historically, the policymakers quickly react to rising inflation. And I think we are in a stage where the global prices on commodities have been on the higher side, and oil prices have been going up. At the same time, the growth is not coming as much as one would have liked it to be. Therefore, it's been a tricky situation as far as the policymakers concerned. There is a high amount of liquidity which they pumped in the last few years. Today, the system is awash with the liquidity to the extent of about 11 lakh crores if you have to take even the government balance into account. At the same time, the credit offtake in the last few years have come down, and most of the companies have not been in borrowing. The single largest borrower in the country today is the government of India and state government, because their fiscals have gone up, therefore they are the large borrowers. Whereas equal amount of borrowers coming from the rest of the economy is not there. Therefore, I think from an RBI point of view, they have to do the fine balance between one, pay attention to the rising inflation on side. At the same time, also pay attention to the growth which is not coming back in a hurry. Therefore, our own estimate, this year will probably see a 2 rate hike by maybe about say 25 to 35 basis points kind of rate hike could come. That does not mean, unlike the past, such a rate hike could be a damaging in nature from the sentiment angle. It also looks unlikely to happen, given the fact the liquidity is very, very large.
Sure.
But having said that, clearly some bit of unwinding process before the 2023 or 24, which is a 3-year time frame, which most of the global central bankers are given as an unwinding process, has to happen over a period of time, not in 1 year, not in one go. And that being the case, I think the kickstart will happen on the unwinding process in the year 2022.
Interest rate hikes, of course, and we watch domestically, we watch very, very closely what's happening, particularly in the US as far as global markets are concerned. And the US is signaling a rate hike for a small business, which is watching today's interview. What is your takeaway for them? How much of what is happening globally should they be watching for? One, and two, if we do see that rate hike, is that being already factored into the forecast you were just giving us?
Yeah, I think clearly from an interest rate point of view, I think structurally interest rates will remain somewhat in the low range, and in the sense that I think what we are used to having a very high interest rate regime impacting the SMEs and MSMEs and small businesses for over a period of time. Definitely the pandemic event that happened have made the central banks have finally found a solution for making the interest rate available cheap for the MSMEs. Thanks to the government of India guarantee scheme that they started rolling out. Clearly, the rate of borrowing for MSMEs and SMEs have come down quite significantly. And given the fact that the bigger corporates, basically the top 12 corporate or top 12 company in the country, used to be the single largest borrowers from the banking system, they are gone, they got reduced, and they have probably gone more towards raising the resources through the equity fundraising plan. Therefore, that dependence on the bank financing has also come down quite significantly. Yeah. Therefore, the money available for the purpose of lending to the MSMEs and small borrowers have gone up so much. Therefore, it looks unlikely that even if interest rates goes up, it looks unlikely that MSMEs will get impacted on the rising interest rates, given the fact that there is absolutely no reason for the interest rate to go up or spreads to go up for corporates at this point of time. So I would probably see the MSMEs will continue to get the benefit of the low interest rate regime, which has been set as a trend in the last 2 years. Probably will continue for a slightly longer period, even going forward, in order to get that benefit to them. So therefore, interest rate rise should not, ideally speaking, impact the MSMEs and SMEs. But having said that, with the global volatility increasing, especially on the currency front, there is a high probability these small businesses have to just keep in mind, keep a close eye, especially on the currency volatility that could set in. If the global growth comes back, there is a high probability that currency volatility set in. That's something, the unknown sources of risk would come. Therefore, all these small businesses, or for the matter, any business for the matter, have to keep a close eye on international development, especially linked to the currency movement.
So that's definitely good news for corporates who are watching this interview. And I want to talk about one of the other things that you think will definitely have an impact as far as entrepreneurship and the nature of small businesses here in the country. I want to talk about the credit ratings and just read out a piece of data. I'm sure you're aware of this. This is more for our viewers who are watching. Rating companies reporting a good credit ratio. This was, though, at the end of last year, October 2021, better than pre-COVID levels. How has that perhaps changed? How is that going to change? How's the view, one, for small businesses which are watching, and credit, the ratio and the credit ratings, one, and two, India being viewed as perhaps a favorable investment destination now with this third wave?
Interestingly, in the recent RBI report, they have mentioned about the rising NPAs could be one of the concern, which I think they have given for the banking system as a whole.
Yes.
But having seen this as a guidance which has come from RBI, my own feeling is the Indian corporates in the last few years have made the balance sheet in a manner that dependency on debt has come down. The focus on cost saving has gone up quite significantly, and therefore increasing the revenue opportunity on the other side and lower cost of productions, and therefore increasing the overall profitability, and also rising the overall source of financing, not through so much of debt, through the equity as a capital market. All such things, if you ask me, the fundamental the model in which most of the businesses are run have undergone a major change. The last 2 years, especially, most of the companies have gone to more to the efficiency creation model rather than depending on debt or high cost debt and those kind of things. But therefore, I think there's a high probability in the year 2022, even going beyond, the number of companies on the basis of the strength that they have created potentially will become a good credit rated papers in the country would only go up, I would assume.
Sure.
That's something which will happen. Well, also they will get sufficiently supported the form of economic recovery come back. So far, if you look at the service sectors, which got impacted on the local economy, also need to get revived in the coming year. With the increased focus that is coming in from the government on reviving the sentiment across the country, the form of government spending, all put together, my own belief is the number of companies will probably get better in the coming year 2022, and therefore the potential of upgrades could be relatively higher compared to what you have seen in the year 2021 as well as 2020.
Bala, I have to take a quick commercial break. We're back in just a moment. Welcome back. With us here on Leaders of Tomorrow, and tonight our conversation on the macroeconomy, on all the moves that are expected to have an impact on the stock markets and much more with A. Bala, MD CEO of Aditya Birla Sun Life AMC. BFSI is a sector, and is one of the sectors to watch for, according to you, if I can call it that. Why are you so bullish on this? And I was just looking at data, nearly 400 BFSI companies are BSE listed, and the number is only increasing. This was as of the mid of last year, so the number is definitely increasing. Why are you so bullish on this sector, perhaps? And any specific trend in the BFSI space that you want to discuss with our viewers today?
I look at BFSI sector is one, first of all, is a proxy to the economy. I think it's the money is actually is for everything, right?
Yeah.
And the banking industry is being a proxy to the economy. As the economic growth comes back, the way the most of the economies globally are trying to actually push the economic growth back to normal and come back to normal life and the overall economic point of view, I think banking industry being the key part of the whole economic activities across the country will be the single largest beneficiary. Second is as the interest rates start rising, the first and foremost, the deposit rates do not rise, but the deposit rates remain the same, given the fact the liquidity in the system is very large and a lot of savings are there with the people. Therefore, the money need to get deployed. Normally, the deposit rates goes up with a lag effect. With the interest rate rising, the interest rate goes up on the lending side, and the credit demand comes back.
Sure.
I think directly, since the banking industry's fortune is directly linked to the increase in credit offtake. But as the stars are coming in the coming financial year, naturally the margin will get better. With the credit growth coming back, the normal activity will come back. Therefore, the high probability of making more money for themselves. And therefore, the sector which has gone through a consolidation phase the last 2 years or 3 years, and that also will come into place.
Sure.
The last but not the least, the entire banking industry is today, either they are now becoming under leveraged in the last few years, given the fact they have raised the capital, all of them actually highly capitalized. Maybe you can say that they raised money in the wrong time during the 2020 pandemic period. Most of the banks actually raise their equity capital in order to remain more highly on the capital adequacy, competitive with the Asian banks and even global banks. And today, most of the Indian banking system is actually is well capitalized at par with international banks. Therefore, when the growth comes back, definitely, I think they will be well positioned to reap the benefit.
Since you're talking about the banking space and you were talking about NPAs in the data by RBI, I just want to push that point further and read out some data and ask you to really comment on that. NPAs as of September 2021 was at 6.9%. On a Y-on-Y basis, lower. September 2020, it was at 7.36%. This is NPAs of 23 banks across both public and private. How are you perhaps reading that data? What changes could we see going forward in the next 2 to 3 years?
So I think I look at it from two angles. So while of course the RBI concern of NPAs rising could probably be seen as something is possible, but having said that, the mindset to pay is far better than the mindset not to pay.
Okay.
I think a few years back, the mindset not to pay, I can get away with things. I think that's no more it's history now. Therefore, the mindset to pay is actually very high. Secondly, as the economic growth comes back, probably from Reserve Bank of India point of view, cannot actually estimate growth will come back. Therefore, companies will become a lot better. It is not their job to say that. Their job is, of course, actually give a forewarning for everything that they do. But given the fact the economic growth will come back, and therefore there's high probability that what the estimate could probably not materialize as it's being seen. And last, of course, not the least, actually, given the fact that the last 2 years of focus on bringing efficiency, the way I think the companies have been building their balance sheet, clearly the global economic growth also has come back. I think there is a high probability the companies will be able to reap the benefit of that. And therefore, from the NPS point of view, will become less impactful, I would say.
Sure.
But last but not the least, from the consumer point of view, I think consumer loans where the Indians at the personal loan side, where a lot of the loans would have been taken, we could probably see some rise in with the lack of income being there. Therefore, it can potentially lead to a rising NPAs. But that as a component of the overall bank scheme of thinking would be very, very marginal, which is bound to account for from the estimate point of view.
I want to talk about something that's happening in outside of the markets, but is definitely perhaps going to have an impact as far as the markets are concerned, and that's the upcoming UP elections. Do you expect that there will be much of an impact once we see the results?
I think from an election point of view, the last few years, I think clearly I see while attention is being paid, definitely from the political environment point of view, I'm talking about the political stability from the country point of view. I think a lot more comforts now being drawn, especially in the last few elections. Clearly, one election outcome, all of us keenly would wait for some bit of anxiety to get created. And given the fact in the last few years how economic growth has been driven, the social benefits have, especially the direct benefit transfers, have actually really benefited the bottom of the pyramid, the people, including, I would say, vote bank. I think clearly I would say the election outcome, whatever is there, to what extent it comes, like people will do analysis on vote share and so on and so forth. At the end of the day, whether these elections are likely to give too much of negative impact looks unlikely.
Sure.
I think people will start looking at beyond election how the economic growth will come, as long as there is a broad level political stability, which is what I think seems to be happening now for the India's favor.
Lastly, before we let you go, of course, I do want to talk about your views as far as technology and tech-enabled and tech-led businesses are concerned. There is a second or a third wave, if I can call it that, here in the country. The pandemic is forcing more businesses to become digital first and tech first. Under technology, any specific trends, any specific companies or sectors that you're specifically excited about?
I think the two things which is I see it happening, Sunanda. One, of course, I think people are moving away from employment to entrepreneurship. And that's the mindset now is coming in. I think the number of people even coming out of the colleges, probably their aspiration to become an entrepreneur is actually far higher today rather than become an employee.
Yes.
And that's something is definitely is happening. Second is actually the way Indian consumer getting adapted to the change in the technology that is coming in. I think clearly the people who are in the service side using the technology and creating a product that can actually be a next gen kind of product. That's something again creating new opportunity for India. It's not coming only from India, even globally. And that is where I think the most of the spending is likely to go up. I think clearly there used to be a question mark that in global market, what's the kind of annual budgeting that one is looking at in terms of digital upgradation and technology upgradation. Earlier, people used to have reservation in terms of how much you want to spend and so on and so forth. Clearly, if you look at most of the spending that happens actually is more towards this area only. Making yourself digitally highly capable, making yourself technology highly capable, both on infrastructure as well as on the digital platform. That is being the case, the spending allocation, like normal capital happens, going to be very large in sectors. I would assume one has to look at this sector on a holistic basis as a structurally longer term story, rather than looking at this story as this sector as a more of a thematic or cyclical kind of story.
All right, Bala, thank you so much for your time here on the show.
Yeah, thank you, Sunday, and thanks for having me part of this show. Thank you.
Out of time on the show. If you have any feedback for us, do let us know. Our contact details on your screens as we speak. Do send us a text on that number you can see, or just give us a missed call and we'll get in touch for your feedback. If you have any entrepreneurs that you think we should be focusing on, do let us know. Have a good night.